Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:09 p.m. on a rainy evening here on the New Jersey, New York City waterfront. It's November 26, 2018. This session will be recorded, uploaded to the Clueless A Trading YouTube channel for all members and anyone out there with the internet connection to view, to learn, to be prepared, and hopefully make some money. Full disclosure, this is purely for financial education and not for any solicitation or advice. And let us begin. A couple of broader points before I get into the technical charts and hopefully some actionable forecasts and analysis that I normally do. So a couple of broader points. We all know what's happening in the markets. There's nothing new. There's absolutely nothing new. We have the China trade wars ongoing. We have three major critical seminal events that are taking place this week alone. And I have posted that a few times. Number one, in sequential timing basis, we have Wednesday in afternoon. We have Fed Chairman Powell speech, very important, on the U.S. economy, his thoughts on what's going to be happening with rate hikes. Hopefully he's going to be a little bit dovish on his basis on raising rates going forward, which is going to be very favorably accepted by the markets. So that's Wednesday. On Thursday, we have the FOMC, Federal Open Market Committee, minutes from their last meeting. That's going to give us a little insight into what all the different Fed governors and committee personnel within the Federal Reserve, what they were talking about, what they were thinking. So that's on Thursday. And then on Friday and Saturday, we have the G20 meeting in Buenos Aires in Argentina, where President Trump and Premier Xi of China are going to be meeting. And there's going to be a joint communique of different sorts. And we keep our fingers crossed and pray that good old Donald and Xi don't get into a fisticuff and get into a little brawl out in the beautiful yards and beautiful courtyards of Buenos Aires, which is a beautiful city. I don't know if any of you have been there. So if that's the case, you can expect a 500 to 1,000 point drop in the market immediately. We're going to go through that on the charts. But I highly doubt that. I do believe that President Trump, who is a very astute deal maker, very confusing at times. Let me just put it this way. He's a fellow New Yorker. We all are a little bit confusing at times. But Donald is especially confusing because of his hardcore rants, especially on the Twitter feed. That's why I named the topic of this session as TA, Technical Analysis versus TT, Trump tweets, which in many cases are just lots of hot air fluff for political reasons, which scare the living daylights out of the market or make the markets very happy. And so the key is that at this point, the thing which is very unnerving to the markets is, of course, what's going to happen this weekend on Friday and Saturday between Xi and Premier Xi of China and President Donald Trump. They do have a plan. They have been talking a lot underneath the surface. There have been a couple of things that have been going on, which you guys might have noticed or not noticed, given the fact that the markets are being extremely volatile. There have been huge gains made on multiple fronts, multiple alerts that have been posted almost every day, to be honest with you, even since last Friday. But we'll get into the behavioral stuff in a second. But other things that have happened is China has approved two major deals, which is the Disney Fox media takeover. There's international consequences. So you have countries like China and have to approve them under the international laws, whatever. They did that. I believe it's a Disney Fox deal, right? Yeah. And then today, very importantly, actually on Friday, we had them approve the Rockwell Collins United Technology deal, which is huge. So why do you think China is doing that right ahead of the G20 summit? Just think for a minute. They've been holding up these approval of these deals for a long time, and now they're showing some good faith and approving them. And of course, we have had big winners on United Technology, thanks to the Rockwell Collins deal. After hours, United Technology announced, which I've been talking about for months now, that they're going to split into 3 different companies. And you can rest assured that stock, which has already moved up nicely and delivered some very solid gains in the form of high double digits, or triple digits percentage ROI returns for us, is going to go higher. So, saying all that, there was also the Brexit situation is also a very macro picture. Theresa May managed to hammer it out with the EU. Now she has to sell it. She has already sold it to her own party, and despite the differences, her own cabinet has approved it. Now it is up to Parliament, the British Parliament, their members of Parliament, to go ahead and approve it. So that's going to be another fight coming up within the next couple of days in December. We had the Italian Five-Star Party, which is also a very populist party, that is now working closely with the European Union on the budget deal, so they didn't get sanctioned. After all, they are still part of the EU, so that is a solid positive. We have oil prices which crashed, now starting to move up a little bit. That is a positive, given the fact that almost 80% of oil companies, especially smaller ones, on the shale oil side, on the fracking industry, are highly leveraged. So you don't want the junk bond or the high yield market to go completely hog wild. So that is good. Oil prices stabilize, moving up a bit. Even oil prices crashing is actually a big positive. That puts more money in the pockets of all of us, the U.S. consumer, and that is, in my opinion, a long-term positive. So saying all that, there has been nothing really negative that has happened over the past couple of days whatsoever on a macro front. Now, saying all that, the condition, the sentiment in the market is as dire, as depressed as I've ever seen. Now, I've been doing this for a long time, and it reminds me of the old days in many different market crises, whether it was the early 2000s after 9/11. I am a survivor of 9/11, so I know exactly how investors felt right after the markets opened a week later. We had, whether it be 2002, the Enron crisis, whether it be 2008, 2009, the housing crisis that caused one of the largest mini depressions in the U.S. economy. The overall reaction of investors and traders is always the same. It has never changed. It has never changed. And running a subscription service for the past couple of years, we're the new kids on the block. We've only been around since 2014. But it reminds me of the old days when I was advising advising on the portfolio management business and for portfolio management and sales, both the analytical and the sales side, institutional clients, as well as high retail network clients. And I mean high retail network. Reminds me of the same behavioral threads as I see within our great Clueless trading service. Now, what are those traits? Exactly the same. complete despair, complete silence, complete apathy, no sign of any involvement overall. I'm talking overall. I don't know what everyone is doing, I'm talking overall. Chat rooms completely empty, which actually is a great thing because it allows me more time to respond less and spend more time providing you guys with actionable ideas. Many, many, many actionable ideas that have been making money almost every day. Many, many of them. Go through the list. Go through the Twitter feed. Look at it yourself. Look at it yourself. Selective ideas, as well as the overall market. So these are, generally speaking, from what I have seen over the last 10, 14 years, signs of a possible large-scale, overall, give or take, a few hundred points here and there, tradable market bottom. Remember, the biggest rallies happen within the context of a falling market. There are multiple stocks in multiple sectors which are in a so-called technical bear market, down more than 10%, down more than 20%. And in between that, we have had big surges, whether it be the Amazons, whether it be Tesla, whether it be Booking. You're talking $38, $65, $17, whether it be Apple up $2 plus, whether it be Twitter, whether it be Facebook up more than $7, whether it be Nvidia up more than $9, whether it be OKTA, Swing Play, which is up more than $7 since I recommended it, whether it be Etsy up more than $5 since I recommended it, whether it be John Deere up more than $6 to $7, one of the most massive reversals since I recommended it, UTX, United Technology, whether it be Illumina, whether it be the SPY, whether it be the SPX QQQs, whether it be Chipotle, down today, overall up big time, whether it be Alibaba, whether it be Square, the overall involvement of the retail emotional trader, from what I can see, I could be wrong, is almost non-existent. These are generally, looking at it from a macro standpoint, the signs of a tradable bottom. So the more this happens, it's actually very exciting for tactical traders because these are the signs that we need to see, whether deep, deep, deep oversold conditions on a technical basis, whether they be behavioral tendencies at a deep emotional apathy condition, what we call diapers, SOA, bunkers, all the different acronyms that we use. These are generally the signs of a tradable bottom. So in between this fallout on the market, which we already, which we deal with every day, here's your S&P 500. We have had massive rallies. We have done intraday short trades, which you cannot sleep with, because if you shorted the market on Friday, right there on this hammer, and Friday was the same story. Of course, it was Thanksgiving, day after Thanksgiving. Didn't expect anyone to be around. But if you shorted or didn't do anything, then you missed out on this massive, massive move today. 354 frigging points. This block, which generated an average of 80 to 180 to 220% in the case of Tesla, the 355 calls. 195% to 200% on the Amazon November 30th, 1625 calls that I recommended last week. Roughly 100% plus, 106% to be exact, at the close on the Booking 1870 calls. Just to give you a slice of what you can make in the throes of this deep anxiety and complete apathy that we see. So that's it. Just wanted to lay it down, guys. All right? So on that note, this is a tough market. So what? Like I always like to say, life is tough. Some of you don't have to worry about making a living. You maybe have a fat paycheck coming from somewhere. Maybe you have a lot of money just lying around on the side so you can live off a trust fund and do nothing. Well, I'm just a simple guy who has to work my butt out to make make a dollar every single day. It's a fact. So that's the difference with me as a professional trader, as somebody who basically just whizzes in and whizzes out. Oh, here's the other thing. We lost about 3 or 4, a short-term loss here and there. Members, great guys, just dropped. Always happens. And I've been doing this for a while now, right? I know this. Back from my Wall Street days as clients who completely lost it and sold everything at the lows, and members who drop off always at the worst possible time they shouldn't be dropping off. Because of the market, because of the volatility. Certainly not because of me, because I'm doing my job. And because primarily of themselves. So that to me, I obviously never don't want anyone to leave, but to me are exciting signs. Those are signs of an emotional and a technical bottom in process, and big frigging massive 400, 800, 700, 900,000 point rallies that we have seen just within the past 10 days. Saying all that, we can't run away from tweets that come out at 4 p.m., right? Futures are down about 12 because good old Donald, my New York boy, decided to open his big mouth to the Wall Street Journal and said, oh, we're going to do this to the Chinese. 4 days before he's supposedly meeting Premier Xi. Now, I know it's a high-stake poker game, and I know they're going to cut some sort of possible, hopefully they do, believe me, for the sake of everybody and the U.S. markets. Because what Donald is doing right now, which I find completely disagree with him, I understand the game theory philosophy of pressure. Trust me, I do. I am a master of pressure. I thrive under pressure. He is completely killing the emotional framework of the U.S. investor, U.S. trader. Look at yourselves. Look at yourselves. And mom and pop are getting so scared, so terrified with this high-stake poker game that's happening with China. And China's not blameless. Don't take me the wrong way, okay? I'm talking just what we're doing. And so that they just don't want to put any money in the stock market, which is the ultimate engine of growth in the U.S. economy. So he's doing some, in my opinion, short term, which also means that people just don't change their mind right away. Look at yourselves. Most of you are so scared that you are missing out on huge trades that are being delivered almost on a intra-week and intraday basis. I mean, on a daily basis. Why? Because of the constant worry of what's going to be the next move in the market. You're not focusing on the charts. And even the charts are getting skewed. Not the long-term ones, but the short-term ones are getting skewed because of this rampant news bombs or news flashes that are coming out in the form of tweets, comments from Washington, D.C., primarily from my boy, Donald Trump. So he is certainly doing some serious damage to the psyche of the American investor, and certainly to the psyche of the so-called smart money, the hedge funds for sure, and you all smart traders. I consider you guys to be pretty smart traders. With all the tools that I provided, you guys should be smart. Even you guys are petrified and frozen because of what might come next. All right. So on that note, I'm going to keep this short and show you the longer term picture and move on. All right. So this is what we're seeing. Keep in mind that I put some very specific comments on my real-time Twitter feed. So you guys can certainly read that all through the day. literally walking through people. So this is what we're seeing here. There's nothing too complicated about it. I like to keep it simple. This was your lows on October 29. This is where we are. This is the lows from the February lows. All I did was do this big, drew an uptrend line with multiple points of contact. That's exactly where we bounced off from Friday's lows. So far, keep in mind, technical analysis is not a perfect science. It's an imperfect science, but it certainly gives us a far better look. Hi, Jody. Far better look into the markets than if you're just watching prices or watching the financial news or watching the tweets or watching all the other negative stuff that's been thrown out there, watching the analysts and all that. So this is still what we're seeing is this pattern. And so far, this is what we did today. That little candle was worth close to 400 points on the Dow, a little less than that. Here's your big downtrend line. Remember, let's keep it real simple here. Real simple. I just want to focus on this chart, maybe one or two, and just leave it at there. If you just focus on the simplicity of, let's put it this way. Let me use an oxymoron. The simplicity of the complexity of my charts. How about that? I'm going to try to make my so-called complex chart real simple, which I always try to do to help you all, so that you can just read these and then do what you need to do. And I'm going to give you a couple of very simple tips that have worked for me very well throughout these circumstances that we have incurred quite a few times since this year. This year is the most volatile year ever. More 1 to 2% to 3% moves back and forth in the market within a span of 48 hours than we have ever seen. Dead serious, right? So obviously I don't blame the normal retail emotional trader to be the brains to be completely mush. But I do expect my members who are being thoroughly coached and guided through this extreme volatility in the form of very straightforward patterns to be a little bit more intelligent than people out there. You owe it to yourself. You owe it to yourself, guys. All right? So saying all that, what we are seeing here is again, patterns do repeat themselves. Like I always said back on my days on Wall Street, every crisis is the same for different reasons. So this crisis is the same for different reasons. But the reactionary behavior of the markets is always the same. So what we are trying to do here is trying to decipher that in the form of, or analyze that, or demystify the markets. That's my term that I use, in the form of looking at pattern symmetry. So saying all that, we are still looking at this. And this was today. The big downtrend line comes into play at around 270 on the SPYs, roughly 2,700 and change on the SPX. Couple of things which you guys have to keep in mind. We know patterns are patterns, but let's look to see what's happening underneath the surface. Underneath the surface, again, this is the KISS principle. Keep it simple, stupid. Stochastics coming off extreme oversold levels, which are in the 5 range on the RSI, on the full stochastics, right there. You can see it. Even during the crash of February, the stochastics, look on the right-hand side, reached 12. See that number right here? Look at it. That was 11.15. We went to a low of 5.41 within the past, on Thanksgiving, eve of Thanksgiving, a day after Thanksgiving. Perfect buying opportunity. Made a bundle today on the reversal bounce that occurred across the board, other than one or two of the swing things like Tillery and stuff, which were up earlier, moved back a little bit. But look at the rest of them. Illumina up $10. Tesla up $18. Google up a lot. I believe at the highs it was up $27. Amazon 1625 calls up 200+%. Amazon went from 1502 on Friday. Just to remind people, because what happens with people, retail emotional traders, is they get so apathetic, so dejected, so disappointed, so sad, so depressed. They don't even bother looking at numbers, because to them it's like, what? I didn't do it, so it's terrible. Imagine if our Marines and our brave armed forces were like that. Would we win any war? Oh, we wouldn't. We'd be speaking Chinese. I mean, sorry. Well, Chinese never invaded us. I'm just kidding. It'd be German, or we'd be speaking Japanese, or God knows what. We'd be invaded and conquered if we were always as apathetic and scared and just pathetically scared. You just have to, you guys have to be engaged a bit. Look at Twilio. You've been talking about that all the time. Twilio, 400% on the November 3090 calls, which went from 36 cents to $2.29. It's just giving you some examples. People have to remind you. So what happens is when people get emotionally so apathetic, so sad, so depressed, it's like a form of depression that's going on, right? Not just you guys, not some of you guys, across the board. You fail to realize what's happening in the real universe of the tactical universe, with how much money is being made. Anyway, so this is what we need to, so that's the reason that I need to remind people sometimes as to what's going on. Of course, you want to remind yourself. You just need to scroll through the Twitter feed and it's all there. It's all there. So this is exciting. I keep on saying, we're not talking about new highs. We're not talking about making all the way to 2,800, 280 on this. We're simply talking about mean reversion. Reflex tactical bounces. What's a mean reversion? The distance you travel. In this particular case, this is the 200-day moving average. I'm showing you the SPYs here. Let me go back to the SPX, so it's a little bit more relevant. Well, SPYs are relevant too, because that's what we trade. So I have marked every single level that matters, just for the benefit of all my members. All right? Every single line. So here's your big fat yellow line, the 200-day moving average. It's all the way here. Simple. You don't need to be a technical genius, guys. You just need to understand my charts better. So from here, we fell really hard all the way to right before Halloween. And then there was a 1,300-point rally or something like that on the Dow, right? Look at that. Majority completely messed up. I said in my video 2 weeks ago, you're going to get a second chance. You are getting the second chance. So don't blow it, guys. Just don't blow it. So I'm going to tell you a very simple tip at the end of this webinar, which would take away not your anxiety or your stress, because life is about anxiety and stress. God wants us to go through anxiety and stress to become better human beings, right? That's what makes us strong. But at least it will take away the daily craziness away. So I'll mention a couple of real simple things that you can do. So this is where we are. So the standard deviation, or how much we've deviated from the moving averages. And in this particular case, we're focusing on the 200-day moving average, was almost minus 6 or 7. Well, guess what? We did the same thing again. Same thing again. So what happens in this particular case? I don't care whether it's a Donald tweet, whether it's some analyst, from analysts, whatever, saying, oh, Apple's going to be completely done. They can't make money. No one's going to ever buy an iPhone, blah, blah, blah. the mean reversion is going to happen, is happening as we speak. Where the futures are down 10 points or 11 points, it doesn't matter. What matters is markets are technical, they're magnetic. The means are magnetic, meaning the average moving average, the moving averages. So the moving average right now on the 200-day moving average is, and I do this just so you guys can see it, it's 2760. Do I think we're going to head back to the moving average 2760? Yeah, it's going to happen. Do I think it's going to happen right away? No. First and foremost, we have to look at the first moving average we're going to hit. And I put that down on my tweet, which is the 20-day moving average. That's 27, let's make this bigger, 2714, right there. We are above the 5-day moving average. See this falling line? See this falling line here? Back on the 30th of October? So that's a 5-day moving average. That hasn't turned yet, but we have a very bullish candle on the SPX. So the 2714. So if you bought here on Friday, which I know most of you didn't, or even bought today and sit patiently, patience is a discipline. 99.999% of kids and adult traders have no discipline or patience. So bottom line is, if you're patient, we are going to at least kiss the 2700 level. That's roughly 20 some points from here. That's roughly 120 points on the Dow. It's going to happen. Now, anything other can happen. We could just crash down and burn and go all the way down and hit 2600 and keep on falling. All that is very possible. I'm giving you the technical basis of what generally happens. So if you just look at this picture here, it is a very, just let's focus on this here for a minute. Forget about 2820, but I'm going to leave it out there. So you have a situation like this. Can we get down and retest the 2600 level? Absolutely we can. Absolutely we can. From here to 2600 is roughly about 490 points. That's a 500 point drop in the market. How many times have we dealt with 600 points down and then the market opens down, ends the day only down 100 points? Many, many, many times. How many times have we seen the market open down 500-600 points and go down 800 points? Never. Yes, slip and sliding, maybe it goes down another 50 points, 100 points, but then it bounces. That's the power of technical rallies. The worse the market opens, the more opportunity you have to make money during that reflex bounce that is inevitable intraday or the following day. I cannot stress that point more. The worse the market opens, if you see the market open down 30 handles, 40 handles, it's happened just in the past couple of days. That's 240 points on the Dow. You inevitably get a sharp bounce during the day, which you sell into, or you end the day higher. Beautiful opportunities to make money. Period. So it's the same case that happened. This was on Friday. No one bought, or when I say no one, I mean the majority. Didn't even touch. We were turning. I showed multiple levels on the VIX. I don't have time to go through all that right now. Please use some of your own time to go through that. Showing that the VIX was still pointing down. The internals were still saying lower. And that's exactly what happened today. It is not always about the price. In fact, it's very little about the price. It is about the structure of the charts and it's about the internals. Is the slow stochastics pointing down or crossover down, or is it crossover up? And in between, of course, volatility comes in and screws up the charts here and there. But net on a swing basis, very seldom does it screw up the charts. Now, what does swing mean? In simple terms, it means discipline, it means patience, it means to buy something and sit on it. If it goes lower, buy a little bit more. As long as it's in a bottoming process if you're a long side trader. So that's it. So this is where we are. We look at the E-minis here, which are a little bit more reflective of what's going on right now. This is 2018. That's why I keep on bouncing this. This is what we're doing. There's not much to think about. The KISS principle. Keep it simple, stupid. And stupid is me. That's why I'm clueless 8. All right? Remember, the simpler you look at these complex charts, the better off you will be as a trader. Believe me when I tell you. This is where we are. We could certainly slip and slide. This is what we did today. Big profits made. This is what happened back on October. Do I think that it'll pick up from there? There's a chance. Do I think we can at least get to 2,700 and this level here at 2726, the 20, 34-day moving average? Very possible. Remember, those are big moves. Because if we get to 2,700 or 2726, we're talking about 70 points here on the handles on the S&P. That's roughly 500 points on the Dow. Everyone thinks the world's changed. Nothing. All it does is comes back and retest these downward sloping lines and then probably fall again. By that time, this will most probably be overbought. I don't think 500 points will bring this into overbought territory. I believe a move up towards the 200-day moving average at 2762. That's a 100-point move. Remember, the move to let me clean this out. The move to this is a 200-day moving average. Obviously, you guys can all read English. So 2762 from here is 200 points. 200 points equals a 1,200-point move on the Dow Jones. Certainly can happen. A handshake, a possible hug, one of Donald's pulls. You know, he puts his hand out there and he pulls you towards you, right? So he does that with Xi. You got a 1,200-point move on the Dow. Easy. Now, if he pushes him away, which he never does, Donald's not a violent guy, all right, guys? I know. I know a lot of people around him. So he's not going to push Xi away. So he's done enough business with the Chinese to know how to deal with them. So anyway, so bottom line is that is it possible that we take a detour to the 2,600 level? Absolutely. Absolutely. If things go completely wrong, I'm just keeping it real simple. If the 2,600 level breaks, we're going to retest 2,550 and 2,526, which was the lows of February 6th and February 9th. And it's going to happen fast. So it's a very critical week. It's a very critical week. I am simply reading the internals, which are telling me that it wants to go higher. Short term. Everything is short term. We have 3 major catalysts, I repeat. Big time. Wednesday, Fed Chairman Jerome Powell. Thursday, FOMC minutes. And then Friday and Saturday, President Trump and Premier Xi. That's all. Do I think that... Well, forget about what I think, because what I think really doesn't matter. What you think doesn't really matter. I'm going to be following the charts very closely. And if things work out on a moderate basis, some sort of constructive communique coming out of the G20, a handshake and a pull, that's 1,200 points. A handshake and a hug is 2,000 points in the Dow. That's serious, all right? Trump, grabbing Xi and giving him a hug, forget it. That's 2,000 points in the Dow in like 10 minutes. Shorts are done. All kidding aside, this is where we are. If the pattern goes the way it is, we are going to go back and kiss the downtrend line right there. Make this bigger. There's your downtrend line. That's at 2762. Pretty much exactly what the 200-day moving average is. If things go better, then we are going to retest the 2824 level. Believe me, all this can happen. It can happen really fast. Just the way this happened, and very few of you took advantage of it. So we do have a second chance here to at least get up towards these levels and possibly to the 200-day moving average at 2762. And if it breaks out over that, then you're going to get one big burp. Anytime it breaks over the simple technical stuff, anytime it breaks over the 200-day moving average, which is right here, back on the 6th of November, you get a massive short covering candle, which you definitively want to sell into. Right? So if the 200-day moving average breaks here, which is this line here, you will get a fat candle, which would hit the 2800 level and possibly 2824. You do not want to be a hero. You sell into it. But in order to get those type of gains, you need to set up the trades prior. So, which brings me to my last point. Keep this simple. The best way to manage and disregard intraday volatility, even though it doesn't feel good, but at least you get to your destination, is just buy time. Buy T-I-M-E. I repeat, buy T-I-M-E. It's not a stock, I mean time on your options by December 21st. Because somewhere between now and December 21st, we ain't going to Armageddon. I'll tell you that. We will get a vicious rally, even if it takes the scenic route down here. You don't necessarily need to hold on to your December 21 calls, or you can buy it a little bit, fly with it if it's going one way, or if it pulls back and takes the detour. If any of you driven in the mountains, okay, and I got trucks, I know how to drive on actually, believe it or not, I've climbed with one of my trucks a couple of years ago, went over a rock which had a 45-degree elevation, okay? Pretty high. So bottom line is that if you want to get the turbulence and it comes down here, then you can buy a little bit more. These are big buying opportunities, but at least you have time to act. Time to act. For quicker moves, the November 30s are fine. 30s are fine. Those are bigger gambles, just in case, things work out. Boom, it goes. But December 21st is the strikes you might want to be looking at on multiple alerts, which I've already alerted, and I've put November 30th, and in most cases, I've put December 21st. That's the best way to do it. That's the best way to do it. Let's take a quick look at the volatility picture. Get out of this picture here. That's Etsy. Beautiful chart. Making money. Got to be in it. Nothing to it. Here is your UTX after hours. Up nicely. Before that, we were buying it all the way from the 124 level. Went to 132. Big frigging money maker. This is United Technology, guys. You want to wave the flag and say make America great? Friggin' buy United Technologies, okay? Buy American. How about that? There you go. All right? It's going to break up. They just announced they're going to break up into 3 different companies. That's old news. I've said that to you before. Now that the Rockwell Collins deal is approved, China gave the approval. They're good to go and it'll unlock a lot of value. The stock, in my opinion, is good for the 140. Roughly, yeah, what it shows here, 135, possibly 140 level. Very cheap calls. They make a lot of money. Got to buy a bunch of them and just sit on it. Buy time. So here's your volatility chart, one of them that I show. And you can see here what's happening. This is on the daily. If you want to look at the whole picture, then this is what it looks like. This is extremely critical. We know that by now. By now, I've trained all of you to know that if you want to know the directional bias of the market, you just have to know how to read the VIX charts. So if you looked at this chart here, and this was back on February, Look where the VIX went, right? That was a volatility implosion. This is what it looks like. It's not necessarily a chart you want to go out there and screaming buy. It's telling you it wants to go lower for now. You can see that. Now, the VIX charts don't always move like individual stock charts because the VIX is a derivative instrument, right? So the candles just appear from like, oh, it's looking great, it's going down, bam, the next candle appears and then screws everything up. So the next candle that'll appear tomorrow is going to be green right here because of futures being down 12. Thanks to Donald's interview with Wall Street Journal, and they decided to publish it right after the market closed. Okay? So whichever the case is, it's still looking down. I'm keeping an eye on it. But overall, on the daily, it's not necessarily, it is basically a head and shoulder with a neckline at 16. If the VIX goes from where we closed at to 16, you got that move up to 27.62 on the 200-day moving average, and you want to be out of Dodge and see that, and then see what happens, right? Really not rocket science here. Now, if the VIX turns around and decides to basically, create a complex W pattern, then the VIX is going to go back towards this levels. That means that the market's going to go to 25.50 to 25.30. Okay? That's if everything goes wrong. So that's how you read the VIX. So really not much to say. We are all, this is a quantitative gamble. We know what our risks are. I believe that if you buy time, you're going to come out well ahead of the game. If you want to actively trade, you want to trade my very precise 15-minute charts. Extremely precise. You can see that. That was the Donald head fake a couple of days ago. If you remember, we were short. We were up like 30%. All of a sudden, this big fat candle appears because he says, oh, China wants to make a deal. We want to make a deal. Personally speaking, I'm just being straightforward here. That type of comment, and then with the minutes later, the White House denying those comments, saying, no, nothing's really been set in stone. And then that weekend, Wilbur Ross basically slamming the Chinese. Pence, Vice President Pence completely slamming the Chinese in the Apex thing. Doesn't do any service for anybody. I think it's wrong. I think it's market manipulation of the highest form, if you ask me. And I think it puts the average American investor, and of course all of you traders, in a level of mental jeopardy that is not right. And I think the administration, in my opinion, you know I'm as straight as a rock when I say this, the arrow when I say this, should not be doing that type of stuff. You cannot be playing around with people's head and make mom and pop out there feel so nervous, so scared, because they believe in the U.S. administration. They believe in what President Trump is doing on the business side. We're talking business here. On the economic side, you do not want to shatter their hopes and dreams and their fear of putting a single dollar in the U.S. stock markets by making random remarks and comments, and then your same team denying that 5 minutes later. I think it's wrong. Just my opinion. Saying all that, this is your trader's ultimate trading chart. This is the Fibonacci chart. This is the 50 moving average. Sorry, the 50 Fibonacci retracement. After big crashes, Fibonacci retracements always happen. So 50 Fibonacci retracement takes us to about 2689. That translates into 2692. Call it 2700 for the S&P. And we probably get there by Wednesday. Powell, very important. Chairman Powell needs to moderate his hawkish tone. I think the market's misreading him from what I gather, but he has to tone down his tone about any aggressive rate hikes because the global economy is starting to slow down. The U.S. economy is going through a lot of jitters. The housing market is starting to shake. CEOs and CFOs are very nervous with all this trade war stuff. And I think, Federal Chairman of the Federal Reserve should acknowledge that. He has acknowledged it, but he has to acknowledge it more forcefully. But he doesn't have to kowtow to the stock market, that's for sure. Even though I'd like him to do that, because that means all our stocks go higher. And all the charts work like magic. So that's your trading chart. Here's your 1 hour, which was also extremely precise. Lots of quick overbought, oversold conditions. This is where we are right now. Futures are down 12. This is where we were. We tried to break out. We almost broke out. We failed. Then we are right here on the after hours tweet. And we are at 26.57. So if you look at the picture here, it's not really that scary. When you look at prices, it gets scary. That's why I try to teach all my members, and I keep on repeating. I will keep on repeating that you guys got to start focusing on the charts. I know many of you do. When you like a chart or don't like it, but you think you understand it, just hit like. So I know which ones people are getting the most benefit out of. And thanks a big bunch to all of you who do. Okay? Because that helps me provide better feedback and more actionable content for all of you to work on. Please hit like so that I can see what kind of engagement you guys are having with that particular post or tweet. So please do that. And of course, follow us on Instagram. Dow Jones, this is what it looks like. This is the DIA. We've been playing that. That's nice. Now, if this goes blood red tomorrow, then things are not good. That means we're going to hit a low again. Right? We want this to be green, slightly red in the morning, and then we want it to expand. It's all candle dynamics. There's a gap fill here, right there. That's why it's shaded in green. There's your full gap fill. There's your 50 moving average. Oops, sorry. I keep on saying moving average. I mean the 50 Fibonacci retracement right there. Right there, right? And that's at 255. We bought November 30s and the December 21st 250 calls on the DIA. They were 36 cents at the close on Friday. The November 30 250 calls on the DIA, which is the diamonds, the Dow Jones Industrial Average ETF. They went to 87 cents today. Do the math. Okay, they were 36 cents at the close on Friday. I said buy them. Saw that. I said also buy them during the day. But I'm giving you the range. From 36 cents, talk about Lotus, they went to 87 cents today during the day. That's 141% in net return on investment, ROI, and 241% as a jump from 36 cents to 87 cents. They closed the day at 60 cents. But you got to trade these things. All right? Don't have to always buy $5 calls and $10 calls and $6 calls. You can buy these little ones at 30, 40 cents and ride the wave. This is where we are on the actual S&P. Last thing I'm going to show you, without boring you guys, we have a confirmed, at this point, a confirmed triple bottom on the full stows. These are powerful indicators. I repeat. When we get down to these levels, like we did back on June, what was this? This was June 28th, right there. Look at this. We had a powerful rally. We could possibly get a very powerful rally up to S&P 2743, if not at least 2710. Whichever the case, patterns always repeat themselves. Tweets or no tweets, news or no news. This is what one needs to focus on. 1, 2, 3. This, even if we get a red candle, which could be an insight day, could be a red candle within the body of this candle, or even slip down a little bit. As long as the stochastics are turning higher, you want to be a dip buyer. As long as the stochastics are turning higher, you want to be a dip buyer. That's when you make the big money. Have a great evening, gentlemen. Thank you for attending. God bless you all. And the biggest thing is, the United States of America is the ultimate brain drain ever. The best minds always love coming here, creating companies, and doing the best thing. Look at what we did today, guys. We landed on Mars. I'm an astronomy freak, okay? We have one of the best science museum right here on the waterfront, Liberty Science Museum. I'm a member. I love just going sitting there on my own for 2 hours and just watching the big sky dome and just flying into the stars. I'm dead serious. I love astronomy. And when I hear, the Voyager, then the InSight, this was called the InSight, and the second Hubble telescope in deep universe, this shows that brains matter. Okay? Brains matter. Make America smart again. That's my slogan. That's what makes America great. By us all being smart. On that note, have a great evening, and let's fight the battle together. God bless you all.